I don't trade the news. That is to say, I do not wait for news announcements to come out and then try to place a trade. Whenever I did try that in my early years, I invariably lost, or I could win, for example, on NFP for 3 or 4 months running, and then one big loss would wipe the lot out. I know a handful of people who do make good profits trading the news, but the vast majority of people I know struggle with it. So my simple best advice is just don't go there. I also know people, for example, who have devised a strategy, and a local guy here in the Canary Islands spent 3 months. He tested on demo accounts. That was the first mistake. Don't waste your time testing news trading on demo, because you will always get your order filled on a demo account, and in the real world it don't happen. And the other thing is that he then moved on to a small live account, less than $1,000, and within the first month he grew his account by 400%. At this point he contacted me very excited. The problem then became, as soon as he placed his strategy on a bigger account, he started to lose. Now, I believe it was the broker that was cheating him, but the other option is that genuinely at times, if you are trading a bigger account, certainly bigger than $10,000, if you're trading a $100,000, $200,000 account, then it could well be that if everybody's buying immediately after a news announcement, for example, there is nobody selling, and therefore you get what's called slippage. It's very stressful, very messy. Long story short, this gentleman spent 4 months in total and hundreds of hours, and finally ended up throwing the thing in the bin. The way I do use the news is I pay attention every day to upcoming news announcements. During the day, every day, I use this site, forexfactory.com. You can set the date and time to your own time area, and what will happen. For example, if I was looking to take a pound trade today, I know that there is going to be red flag news. Orange flag is medium risk news, and yellow flag is low risk news. That is to say, in theory, this should have little effect, that should have a moderate effect, that could have a major effect. I have seen completely the opposite on numerous occasions. This can come out and cause chaos, and this can do nothing. It's a complete, utter guesswork to me. Therefore, the way I would deal with this, if I am looking to place a trade on the British pound, and this news is due out in the next hour or hour and a half, I will wait until the news comes out, and I will wait till half an hour afterwards and see if price settles down and then resumes the direction I am looking for. I don't trade Fridays very often, and I never ever trade what's known as NFP, non-farm employment change in the US. And the reason I don't trade it is Forex at its most erratic and completely, utterly unpredictable. This was last week, this was Good Friday, and what you can see here is that the experts were predicting, the market was predicting that the figures would be 207,000. Last month's jobs growth was 240,000, and in actual fact the result that came out was 120, which was dramatically different, and that is a recipe for chaotic moves. And often what will happen, price will charge off in one direction and promptly turn around and go the other. I have also seen in my trading history an occasion where price on the British pound, I think 3 or 4 years ago, when the price actually gapped almost 200 pips. I think it was on the pound, and therefore if you had a stop and let's say 10 pips above price and it jumped 200, you just got taken out for 200 pips, which could have destroyed your account. Final thing here to note, the white days are bank holidays, and depending on the country, I don't generally trade bank holidays. I ignore Chinese bank holidays because I don't trade the yuan, and also the Chinese are not known to be heavily involved in the Forex markets. But the British, the Canadian, the US, the Europeans definitely are so. And the fewer traders that are in the market, then the more likely that we will have more erratic days than normal. I'm going to show you now a live trade example. I am currently 180 pips in profit on a Euro USD short from last week. There is big news due, and my concern now is that if the news comes out that is particularly bad for the USD, suddenly my 180 pips could be destroyed or a very big hole made in the profit. So what I have done is I have scaled out. I have taken 70% of the profit and banked it, and I have moved my stop beyond my entry, and I'll show you now how I play this particular trade. Here's a good example. We're now waiting for some major news on the USD. This is 1:30, so it's just at the New York Open, 1:30 London time. This morning the euro had worse news than expected, and therefore the fall continued, and I am continuing to look for potential shorts. Now in this particular trade, I showed you last week I was shorting at 31.90. I have taken 70% of my profit off this trade, but I am now leaving the balance to run, and therefore I moved my stop down to 31.10, just the other side of the whole number and this fib. If I still had a lot in this trade and I was concerned that we may get a major pullback, I would move my stop much lower down here, and I would go at 30.55. Often price will stop at the whole numbers and the half numbers, i.e. 50. So 5 pips above, we have this recent support and resistance here. So I'd go to 30.60. That way, if I am taken out and I'd had all of the trades still running here, I would have banked a decent amount of profit. Because this is a longer term move potentially, I am hoping, as I said, I have left this with some room to breathe. We've had one little bit of news so far. Retail sales in the US were much better than expected, which should logically see the dollar strengthen and the euro weaken. However, after watching news announcements for many years with Forex, you come to realise that logic often goes out the window. We need to see what these other 3 announcements are doing as well. Empire State Manufacturing is much worse than expected, so it's mixed news. Often when you get mixed news, you can get a run in one direction followed by a turn the other way. The retail sales is positive for the USD, and the Empire State Manufacturing Index is a lot worse than expected. So we'll see what happens. I've moved my charts down to a 15-minute time frame just to see what's going on. There is a temptation here. If price suddenly sets off in a direction, a lot of new traders and a lot of adrenaline junkies will dive in. But from past experience, I will tell you, let's say this suddenly starts to run up and you decide to dive in to join in. Suddenly you will find at the very minute that you enter the trade, it will promptly turn around and go back the other way. So if I'd been looking to take a trade on this Euro USD, I would wait for the dust to settle, let the initial move take place, and then see, once the dust settles and things calm down, see what trend we are going to get for the rest of this day. Final news for the US at this 1:30 announcement was the Empire State Manufacturing Index, which was way worse than expected. Expected at 18.1 and came in at 6.6. So very mixed news. Retail sales up, this news announcement down. Notice the CAD as well. The CAD had $12.5 billion worth of foreigners investing in Canada, as opposed to an expectation of 4 billion. And therefore you would presume that the CAD would race in value. It is a lower ranking of news, but that is still a colossal difference, and therefore you would expect the CAD to get stronger and you'd put your shirt on it. And what's happened to the CAD? The CAD is currently breaking upwards. Therefore, had you been looking to short once again at 100, the news came out, apparently positive for the CAD, and therefore you expect the US dollar to fall, and in actual fact the complete opposite has happened. Hopefully you understand where I'm coming from with this, and why I wait for the news to come out, let the dust settle before entering trades. We are now 4 hours past the US news announcements. The euro did race back up on this occasion. Had I moved my stop to 1:30.60, as I explained, a more aggressive stop, I would have been taken out now, but I would have protected my profit. As I explained, I am looking for a bigger overall move here, and therefore I've left my stop at 31.10. If that gets taken out, I will be looking to short this pair again, because I do believe that we are on for a short, and the daily chart still, the fib is in this area as well. So lots of reasons here why I'd be interested to short. Why did it bounce up back down here? Well, we're back to that famous support and resistance we've been talking about all the way through. It's the huge psychological level of 130, and that is why and where price bounced off. And if it's going to burst through here, what often happens is either a news announcement, which is what I was hoping for, would have forced price down. Other times price will pull back and then have another run at it. And I describe this almost as a cop running at a door with his shoulder, that he will run at the door, bang, bounces off it, he'll run back and have another go, and sometimes it needs 3 or 4 goes. But as I said, long term, I am looking and hoping this is going to break down. If it breaks back above 132, then we'll have to have another think of a different plan. Always be flexible.